Hi everyone, and welcome back to the February 2023 monthly economic update for Economy.lk. A lot of things took place during the month of February, so a few things to unwrap, explain, and as we look forward to March and April, what can we expect? The primary aspect is how close is Sri Lanka to get the IMF program in place. I think we've seen substantial progress towards that. A lot of financial assurances coming in from the bilateral creditors such as India. We've also seen the Paris Club, which consists of the US, the UK, France, Japan, amongst other members, also providing that reassurance to Sri Lanka and the IMF as well. And we're waiting on a few other more bilateral creditors to come in, plus all the other factors related input that we've done in terms of pricing formulas for fuel, electricity, and so on also have materialized in that way. And also we've seen the cabinet approval for the new monetary act as well, which is expected to be gathered soon. So we could be very close to an IMF program, and it's something hopefully the market and the country as a whole will expect in terms of macro stabilization efforts that the country and the policymakers are pursuing. Because if you look at it from growth front, still growth is not looking too great. The Purchasing Managers Index for both manufacturing and services is still low and indicating month-on-month contraction. And even though this is taking place, I think the CBSL and even our forecasts expect the first half to be difficult in terms of economic growth and activity, but the second half to get better as well. And some of these factors driving this is, of course, the interest rate environment. I think we're seeing the early signs of interest rates declining as well, which is positive, and hopefully that will mean lending rates will fall, so that it will not only help from a consumption point of view also, but it will also help a lot of the companies reduce their working capital costs and eventually think of more investments as interest rates come down as well. Inflation is also trending downwards, which is also a positive sign, and I think that will also help in the whole interest rates adjustment downwards as well. We saw in 2022 the sharp contraction in imports, over a 2 billion contraction in imports. We also saw exports rising, and as a result of this, we saw the lowest trade deficit in 2022 since 2010. So a 12-year low for the trade deficit, and a lot of that, of course, driven by the fact that there was a lot of dollar liquidity issues, some of it driven by import restrictions, the others driven by demand as well. And this parity might need to be maintained, in particular in the first half, as we see a little bit of a slowdown in exports, and it'll be interesting to see what the numbers are like as the months progress in the first half of this year as well. To compensate for this, tourism and remittances are doing much better. We've seen remittances come back to about 400 billion a month in December and even in January, and tourism also seems to be now picking up and contributing to the overall dollar liquidity positions of the banking and financial sector as well. From a global side of it, I think the main focus is on growth. The growth estimates, the IMF downgraded it to under 3% for global growth, and a lot of the key markets that Sri Lanka exports to also slowing down as well. But also there's also concerted effort from the G20, from the IMF, in terms of assisting countries similar to Sri Lanka that are having debt issues in terms of repayments, in terms of dollar positions, to see how best to help them as well. And a lot of discussions in this front hopefully will help Sri Lanka's process as well. So thank you so much for tuning in, and we'll continue to keep you up to date and posted on the key developments of the month, and it'll all be here on Economy.lk. Thank you.